In this video, I'm revealing a game-changing trading strategy that leverages two of TradingView's most precise indicators. This strategy shines on lower time frames like the 1-minute and 5-minute charts, making it ideal for day traders aiming for quick, consistent profits. It also performs impressively on higher time frames like the 1-hour and even on daily charts. Whether you trade cryptocurrencies like Bitcoin and altcoins, major forex pairs, or stocks, this strategy delivers exceptional results. Imagine the potential profits you could achieve with such a versatile strategy. I have tested this strategy 100 times manually on the FTM USD 1-hour chart, and here are the results. I started trading with a $5,000 account balance. Depending on volatility and the session, I use 5 to 10% of my account per trade. For example, if I profit $100 on a trade, my new balance is $5,100, and I use 5 to 10% of this updated balance for the next trade. Conversely, if I lose $100, my balance drops to $4,900, and I use 5 to 10% of this new balance for the following trade. Just think about how quickly your account potentially could grow with such consistent wins. Traders, before we start, make sure to like this video and subscribe to my channel. This way you won't miss out on any of the powerful trading strategies I share, which can significantly boost your trading success. Okay, without wasting any time, let's get straight into it. Today, I'm excited to share a powerful strategy based on reversal trading. If you're not familiar with reversals, it's a technique where you enter the market when you anticipate a complete change in the prevailing trend. In simpler terms, you buy when a downtrend is about to reverse into an uptrend, and you sell when an uptrend is about to reverse into a downtrend. This approach allows you to capitalize on major market turning points and can significantly boost your potential profits. However, it requires careful analysis and timing to ensure that the reversal is genuine and not a temporary correction. This style of trading can be quite risky on lower time frames, especially if you're not experienced. But don't worry, the strategy I'm about to show you in this video is a very safe version of reversal trading. It follows strict rules, each of which is absolutely crucial to follow. By adhering to these rules, you can minimize risk and achieve highly accurate trade entries. Imagine making nearly foolproof trades and watching your profits soar. As an example, we will use the FTM price chart on a 1-hour time frame. The strategy includes 2 indicators only. In order to add the indicators, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium. It is the most popular premium tool created by LuxAlgo. It has over 25,000 likes, which tells us that it is highly reliable. So click that to add it to your chart. And for the second indicator, you want to add this one, the Price Action Concepts indicator, which was published by LuxAlgo as well. Alright, now let's click the settings of the Signals and Overlays indicator. For the signal mode, we want to use confirmation and exits. Set the candle coloring to confirmation simple, and leave the smart trail enabled. For the signal sensitivity, depending on the asset and time frame you're trading, I'll recommend using the autopilot sensitivity set to mid-term, or use the manual sensitivity recommended by the dashboard. Now you want to click the Style tab and disable both the bullish and bearish exit signals, as we don't need them for our strategy. Moving on to our second indicator, open the settings of the Price Action Concepts indicator, and let's start with the market structure labels. We want to use the internal market structure labels as an entry confirmation, so make sure to set this option to all. Depending on the asset's volatility, you should use a lookback period between 5 to 10. Personally, I prefer using 8 for the 1-hour time frame. For example, when trading Bitcoin on lower time frames like 5 or 15 minutes, I am using a value of 10. The same principle applies to order blocks. Depending on your asset's volatility, use a length between 5 and 10. For the time frame, ensure you use a time frame that is 2 to 4 times higher than the one you're currently trading on. Since I trade on the 1-hour time frame, I use the 2-hour time frame for order blocks. Remember, you should adjust these values based on your specific asset and time frame. Our setup is ready. For today's strategy, our main focus lies on order blocks. These blocks on your chart represent areas where significant institutional orders have been placed, similar to supply and demand zones. At first glance, you might think, just buy at the order block and sell at another block. However, while these blocks are excellent for identifying high activity areas, we need more confirmation to make profitable trades. Order blocks are crucial for identifying significant support and resistance areas, whether the market is ranging or trending. These blocks function like supply and demand zones, but are more precise in highlighting institutional activity. But you need to make sure to incorporate these blocks into a broader strategy. We'll use order blocks to find entry points, but this is only our first entry confirmation rule. Trading based solely on these blocks would not be profitable on the long haul. The primary function of order blocks is to act as initial signals. When the price comes back to retest an order block located below the current price action, it suggests a potential buying opportunity, and when it goes up to retest an order block located above the current price, it indicates a potential selling opportunity. However, you're going to want to make sure to have additional confirmations before entering a trade. So, watch for the price to test these blocks. Use the order blocks as your first confirmation method to identify potential entry points. When the price tests a bullish order block, consider it as a potential area for buy trades. Conversely, when it tests a bearish order block, consider it as a potential resistance area for sell trades, and always look for further confirmations before making your move. So, when exactly should we enter buy or sell trades? Here are the exact rules for a buy position. Make sure to pay close attention to every single one of them. First, watch for the price to go down to retest an order block sitting below the current price action. Next, ensure the price action enters and completely exits the order block. This step shows the market is preparing for a bullish reversal. Second, wait for a green buy or strong buy signal. This confirms the upward momentum. Third, check that the smart trail is blue-colored. This indicates the trend is in your favor. And fourth, most crucially, wait for a bullish market structure label before entering a buy trade. This confirms a potential trend reversal. If all these conditions are met, enter a buy trade. For the stop loss, use the smart trail, the order block, or the most recent swing low. And for profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. By the way, this video isn't sponsored by LuxAlgo. However, using my link in the description, you can support my channel and get up to a 20% discount on their premium indicators. And with a 50% discount for annual subscriptions and a 30-day refund policy, there's no risk in giving it a try. Now, this was a 20% move with a 1 to 3.3 risk-reward ratio. Look how perfectly these indicators match when it comes to spotting reversals. Now let me show you another buy trade example. First, watch for the price to decline and retest an order block situated below the current price action. Next, ensure the price action enters and completely exits the order block. Second, wait for a green buy or strong buy signal. Third, check that the smart trail is blue-colored. Finally, and most importantly, you want to wait for a bullish market structure label to appear before entering a buy trade. If all these conditions are met, enter a buy trade. For the stop loss, use the smart trail, the order block, or the most recent swing low. For profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. This trade delivered a 16% gain with a 1 to 1.8 risk-reward ratio. Amazing how these indicators contribute to our trading success. Traders, if you like this video and strategy, don't forget to hit the like button and subscribe to my channel. Moving on, let me show you how you want to enter a sell trade. First, watch for the price to go increase to retest an order block sitting above the current price action. Next, ensure the price action enters and completely exits the order block. This step shows the market is preparing for a bearish reversal. Second, wait for a red sell or strong sell signal. This confirms the downward momentum. Third, check that the smart trail is red colored. This indicates the trend is in your favor. And fourth, most crucially, wait for a bearish market structure label before entering a sell trade. This confirms a potential trend reversal. If all these conditions are met, enter a sell trade. For the stop loss, use the smart trail, the order block, or the most recent swing high. Remember, if you want to take your trading to the next level using LuxAlgo premium indicators, use my link for the chance to get up to a 20% discount. And with a 50% discount for annual subscriptions and a 30-day refund policy, there's no risk in giving it a try. And for profit taking, do not use a specific exit strategy or an exit signal. Instead, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. Now, this was a 20% move with a 1 to 3.9 risk-reward ratio. Look how perfectly these indicators match when it comes to spotting reversals. Now, let me show you another sell trade example. First, watch for the price to go up and retest an order block situated above the current price action. Next, ensure the price action enters and completely exits the order block. Next, wait for a bearish confirmation signal. Third, check that the smart trail is red colored. And finally, wait for a bearish market structure label before entering a sell trade. If all these conditions are met, you want to enter a sell trade. Set your stop loss, and for profit taking, use the smart trail as your trailing stop loss and exit your trade in profit as soon as the price action hits the smart trail line. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.